December 10th, 2025. Let's see how many times the strategy came into effect today. We're going to go over something a little bit different today. I'm going to show you a very minimalistic, very simple trading strategy that I am developing, that I love, because it fits my personality. A lot of traders have trouble because they haven't found a style that fits their personality, which is probably the most important quest search you can go on in trading. Learn a bunch of different strategies, mess around with all of them, and you'll find out quickly which one you like, which one makes you excited, which one makes you nervous, which one makes you anxious, which one makes you feel productive and competent, which one makes you feel incompetent and destructive. So what I'm going to go over today is the same strategy I always go over, but we're going to really narrow it down to just the 5-minute and the 2-minute. We're going to stack the momentum of both. Normally we stack momentum on 3 time frames. Normally we're stacking the 30-minute momentum, which is this one here. Normally we're taking the 30-minute momentum, which the MACD, all the MACD tells you is momentum. Yes, it's giving you some other information, but mostly it's a momentum indicator. Okay, so normally we take the 30-minute, we align it with the 5-minute, and then we align the 5-minute with the 2-minute, or the 1-minute, one of the two, the lower time frames. But today we're actually going to cover what happens if you forget all of that and just do the 5-minute and the 2-minute. What happens when the 2-minute and the 5-minute align with regards to their momentum, when we get that alignment, and we get a volume confluence at the same time? When all of those 3 things happen, can we win? Can we make money? I took 4 trades today. All 4 were wins, and they were involved in the strategy we're about to go over. This is T triple Q here, but this is completely correlated and directly correlated with NQ futures. I trade both. I prefer to trade futures, but I trade both, and they're the same thing. They're correlated. So let's start. Market opens right here. And our 5-minute is going strong in the down direction. Once that first 5-minute MACD candle prints, strong selling, and we're going down. Okay, so right off the bat, now we're going to be looking for opportunities. Not right off, not the first 10 minutes of the market. That's kind of risky, trading the first 10 minutes of the market. We're just reading the market energy for the first 10 minutes, okay? And then we're looking for downward opportunities, because this is to the downside. We want to wait till the 2-minute stacks to the downside as well, stacking the momentum. So here, the MACD starts to flip to the downside. So had you entered right here, yes, you would have made money, but there was no volume confluence. There was no power volume bar, a volume bar which is greater than the previous 3. We didn't have that going to the downside at this point. We're losing volume. So we didn't take these trades because we don't have a volume confluence. We don't get a volume confluence until right around here, where the 5-minute momentum starts to realign to the downside, which is what we want. We don't really want to be taking trades if the momentum is dying. We want to take the trade if the momentum is building. Okay? That happens right here. Look. This next candle, pay close attention. This is the 2-minute chart, if you haven't noticed. This very next candle right here has a big power volume bar. We are on the right side of the 2-minute MACD momentum. Our 5-minute has finally flipped to the downside. So this is a valid setup here. We enter the position right when the candle closes. We put our stop loss somewhere above that candle with a little bit of breathing room. We target a 1-to-1 normally. That was a win. Okay. We go to see if another opportunity arises, and look what happens right here. We get another power volume confluence right here. We're on the right side of the momentum now. So we would enter the trade at the close of this candle right here. We would put the stop loss slightly above that candle. We would target a 1-to-1, and that wouldn't have hit. That would have been a loss. Do you see now why I normally bring up the concept of taking partial profits and selling a little bit, taking profit a little bit on the way to the main target? So if you're targeting a 1-to-1, like we always say, like I always say, then that's fine, but you should be willing to take a little bit of profit off as it starts moving in your favor. This is a good ratio, okay? This is the thickness of the candle, and this is the risk involved. So we almost did hit a 1-to-1, but not really. It was more of a 2-to-1 that we hit. Okay, so with a 1-to-1, we've got 1 loss and 1 win so far. Had they both been 2-to-1, then we would be sitting on 2 wins so far. And now let's move forward. Look, 5-minute now finally flips to the upside. Had the 5-minute flip to the upside earlier, which it did, we would have been looking for upward confluences, but there were none. Let's go back just so you can see that for yourself. The 5-minute has officially flipped to the upside right here. Now we've got that confirmation, the flip has occurred. So we look here at this is the next place we look, and look what's happening. The histogram momentum is going down. That's not aligned. So that's why we never took a trade to the upside. We didn't have an opportunity to do so. And by the time this downward flip occurred right here, now we've got clear downside potential. That's why we took that first trade. That's why that first trade was a win. Second setup was here. All right, so let's go forward. Now we've got a flip to the top side right here. Once this concludes, which is right here. Now we've got a confirmation on the 5-minute. Now we're looking for upward opportunities. Now we're looking for a volume confluence and alignment on the momentum histogram and the volume right here. Do you see that happening? No. Look, nothing. It doesn't happen until right here. But now we're on the wrong side of the histogram, see? Here's a volume confluence, but now we need the momentum to align. That starts happening right around here, look. We get a volume confluence. This bar is now ticking to the upside. That's aligning the momentum. But now look what's going on. Our 5-minute momentum is not expanding, it's not building, it's actually decreasing. So if you take this trade, you definitely want to reduce. You don't want to target a 1-to-1. Here's where you would enter right here. You would put your stop loss below that candle. A 1-to-1 would be all the way up here. But if the 5-minute is dying like it is, if it's losing momentum like it is, then you would want to take quicker profits most of the time, like a 2-to-1. That would have been a win. Okay, say you want to stay with the 1-to-1 ratio. You don't care if you lose or win. You want to stick to the basic 1-to-1. You don't want to change anything. Fine. Your stop loss would be here. And look what happens. The stop loss never gets hit, and the 1-to-1 finally does get hit over here. So either way, it's a win. Either way, that's a win. 2 wins on the day, 1 loss. 3 wins on the day, 0 losses if we're playing with a 2-to-1 risk to reward. Okay. The 5-minute doesn't start building momentum until right here. Till right here, the momentum is now building. So what do? We wait for the 2-minute to align, and we wait for a volume confluence, and look what happens right here. We get a volume confluence, a volume bar greater than the previous 3. We're now on the right side of the momentum. We're aligned with this 5-minute is now building momentum, as you can see from this previous MACD bar right here. We're popping up. So this is alignment. Your trade would be entered right here at the close of this candle. You would put your stop loss slightly below that candle. You would target a 1-to-1, and you'd get a win. So far, 3 wins and 1 loss, or all 4 would be wins if you were using a 2-to-1 RR, and 3 wins, 1 loss if you're using a 1-to-1 RR. Okay, we flip and we get confirmation to the downside on this very next candle right here. We get confirmation, the 5-minute flips and concludes, giving us permission to take trades to the downside, and look what happens. Right when that occurs, we get a volume confluence. We're on the right side of the momentum. This is another opportunity to make money. We enter the trade right here at the close of this candle. We put our stop loss slightly above that entry candle. We target a 1-to-1. That's another win. Just a lot of wins going on right now. A lot of wins. Look what happens right here. We get insane volatility. a lot of volume comes into the market. There's clearly some battle between algorithms that got triggered around 2 p.m., around 1 p.m. Some really intense stuff started happening with algorithms. And we didn't trade this because in times of high volatility like this, yes, it's worth it, as denoted by these blue lines right here. These blue lines are denoting these entries based on this strategy that I'm telling you right now. And look what happens. They all were winners, okay? If this blue line says, hey, this candle was the entry, look at this money right here. This blue line is telling you, hey, this candle was the entry. Look at this money right here. There are a lot of wins going on, but I didn't take these trades because of how highly volatile it was. I wanted to wait slightly longer. This purple line represents just a more intuitive, more discretionary entry, which is saying, hey, this candle right here, enter here. It really pushed down. That technically would have been a loss. But at the same time, it could have been a win as well, depending on how I structured the RR. I didn't take that trade either. The final last trade of the day I took was actually in the last 10 minutes of the market, which is my favorite time because that's when the algorithms really turn on and a lot of crazy stuff starts to happen. I don't know if you've noticed that yet. Go to any market day in NQ and SPY, look at the last 10 minutes, you'll see what I'm talking about. So right here, we're really losing momentum. Okay? And I'm seeing this build on the 2-minute chart. So I'm thinking the chances of this going down during the last 10 minutes are very high. This is what I'm thinking at this current time. So I actually decided to enter the trade right here on this next one because why? We have a volume confluence. We're on the right side of the 2-minute. The crossover is happening. It hasn't happened yet. It hasn't concluded yet. This is an early entry. This is a risky entry, but I did take it. And we ended up getting a big win. Your entry would be right here. Stop loss slightly above that candle, target a 1-to-1. So all in all, today we had a lot of opportunities with this basic 5-minute, 2-minute strategy based on volume and based on aligning momentum. I hope you had a good day. I will see you in the next one.